Hi, I'm Rebecca Foote from the Rebecca Foote Mortgage Team, and we get asked a lot about a 1031 exchange. And the truth is, we are not the experts on it, so we decided to bring in somebody who was an expert on it. So today joining me, we have Nick Montagnese from Cherewka Law. So thanks for coming in and helping us out with this topic.
Absolutely. Yeah, happy to be here.
So tell us what a 1031 exchange is, because I don't think most people even know.
Sure. So a 1031 exchange, or it's also sometimes called a like-kind exchange, is a specific rule with the IRS under the Internal Revenue Code. And what it says basically is when you're selling a property, the normal rule is that if it's an investment property, it's not a home, you're going to pay taxes on your gains or your profits. So with a like-kind exchange, the IRS has created a rule that says if you trade what they call like-kind property for another piece of property, there are no taxes due. So a couple things to know about 1031 exchanges is that first, what they call or consider like-kind property is basically any investment property. So they don't have to look the same or be the same size or the same value, as long as the property you're selling is an investment property and the property you're purchasing is also an investment property, it can qualify for a 1031 exchange. So the big advantage again is that when you sell your property, rather than paying tax on that sale, you can get a new property and take the proceeds from the sale and put it into the new property. Now, it's called an exchange because it's supposed to be a trade of one property for another. But I've been doing this for a long time. I've never seen anybody that finds someone who wants to take their property and do an actual trade. So how does a 1031 actually work? So the way they work is you have to get a company involved that's called a qualified intermediary. And what a qualified intermediary does is they will take the proceeds from the sale, and then when you find the new property that you want to purchase, they roll the money into the title company so that you can complete the purchase. So that's basically what a 1031 is.
Okay, so if I have a commercial building, can I exchange that for a 4-unit rental?
Exactly,
Okay.
yes. Yeah, any
because they're both considered
property.
investment.
Correct,
Okay.
Yep. So as long as they're both investment properties, they're not a personal residence. There are some special rules around vacation homes because they're kind of partially personal, partially investment. But generally speaking, any investment property can be exchanged.
Okay, so what's the biggest advantage of a 1031? Is it the tax benefit?
Correct. So let me give you an example. So if you have a client or an individual who's selling a property for $500,000, and maybe they bought it 15 years ago for $200,000, there's going to be a $300,000 gain there, not considering any other tax implications like depreciation or things like that. So normally you'd be paying taxes on that $300,000, which can be a lot of taxes in 1 year. By doing a 1031 exchange, let's say that they no longer live in the area, or they want to get rid of a 2-unit and go to a 4-unit, or kind of get into a different type of rentals. They can sell their first unit for $500,000 and take those proceeds and purchase a new building, and they'll end up with the new property that they want, and there will be no taxes involved.
Yeah, and that's awesome.
Yeah, it's definitely a huge advantage.
So how does a person decide if that's right for them? Because there's fees involved with the 1031. So
correct.
It's the right thing for everybody to do.
Correct. So if you want to get out of the rental game, or you don't want to own any investment properties anymore, then it's not right for you, because there's only one way to do it, which is to basically exchange property for property. If you are moving to a different area or something, or you don't want to pay the fees, there's some considerations there that maybe you wouldn't want to do it. Now, you did mention about fees. So the qualified intermediary, that is the company that gets involved with these, they're national companies. There are many of them. They all charge different fees, but generally for a traditional exchange, you're looking at anywhere from like $2,500 to $5,000. It's not incredibly high fees, especially when you consider the thousands or even hundreds of thousands in taxes that you're going to save.
Absolutely.
Yeah.
Absolutely. So, you kind of gave us a little bit of who's involved in it, but how does it actually work? I know there's time frames involved, and
Sure.
so run us through that process.
Sure. So step one is to make the decision that you're going to do a 1031 exchange, or you could possibly do one, because you can start the process and then decide not to do it. So if you're selling a building and you think maybe I want to try and save on the taxes and do a 1031 exchange, the first thing would be to contact either a real estate attorney or a qualified intermediary and ask them kind of if it's right for you. And And the next step would be to sell your property or purchase the new property. There's a couple different ways to do them, and I can get into that in a minute. But you want to get the qualified intermediary and the attorney involved as soon as possible, because there are some time implications with a 1031 exchange. The biggest time factors are after you sell your property, you have 45 days to identify the new property. You can actually identify up to 3. Because sometimes deals fall through, things like that. But you have 45 days to make that identification, and then you have 180 days from the day you sell your property to complete the closing.
Okay.
The other big rule that has to be followed is the funds can never touch your bank account. So when you sell your property, the funds from your closing have to go directly to the qualified intermediary, and they hold those proceeds until the purchase is completed. So if you sell your property and you get a check at closing and then you want to go to the qualified intermediary, it doesn't work because you've already gotten the money.
So you have to decide this up front.
Yes, exactly. So the earlier the better. Talk to a professional. Absolutely.
Okay. All right. And I think you handle the time constraints, right?
Mm-hmm.
Okay.
Yeah.
So is there any other exchange options that we should be aware of?
Yeah, so what we're kind of talking about in the most common type of 1031 exchanges is just what's called a traditional exchange. So that's where you sell a property and the funds from the sale go to the qualified intermediary, or the QI is usually what we call them for short, and then you locate and close on your next property. Now, that property can be more expensive or less expensive than the property you sold. If it's more expensive, let's say you sell a property for $500,000 and you want to buy $1 million property, well then you take the funds from your closing, you roll that into the new purchase, and then you can put your own money in, or you can get a loan just like you would in any other transaction. If the property you're purchasing is less expensive, so let's say you sell a $500,000 property and then you buy a $300,000 property, you're going to have excess funds, and then that's what's called boot. Don't ask me why it's called that, but that's what the IRS calls it, and you'll just have to pay taxes on the excess funds, or the boot.
Okay.
So the less common scenario that we run into is what's called a reverse exchange. A reverse exchange is when somebody purchases a property before they sell. And those get a little bit more complicated because when you buy a property, that's not a taxable event in the IRS's eyes. So the only way to make it a 1031 exchange is the qualified intermediary has to act as kind of a straw purchaser. So they will actually purchase the property in a special purpose LLC, and then you have to wait to sell your property. The same time constraints apply. So when they purchase the property, you have 45 days or 180 days from the sale to complete the sale of your property. Those get much more expensive because you have a qualified intermediary acting as a buyer. The lenders usually charge extra fees, so those can get fairly expensive.
Wow.
Yep.
I've learned a lot today.
Sure.
So it's a lot to digest, but it's something that can definitely save people a lot of money.
Absolutely,
so.
yeah. It's a very powerful tool. We typically see when clients learn about these and do them, they do them again and again and again.
Yeah, and we've recently closed a couple of these transactions where we've done the mortgage on the excess money, like you said, that needed to be covered.
Absolutely, yeah. If you've got investors that are looking to upgrade their properties to maybe bigger units, or if they're going to switch from residential rentals to commercial rentals and they need a lender involved, it's a great option for them.
Yeah. So if somebody is interested in getting more information on this, how would they contact you?
So you can call my office. We're located in Wormleysburg, right on the river across from Harrisburg. Our phone number is 717-232-4701, and you can always visit us online at CherewkaLaw.com.
All right, well, thanks so much for coming in today.
Thank you.
And if you need any information from Nick or myself, all of our contact information is listed below. Thanks for tuning in, and please make sure you hit that subscribe button.